Hi, I'm Pattu from freefincal. What a crazy way in which the markets reacted to the budget. It moved up by 5%, negating all the losses of the previous week. About 6% loss last week. Now about 5% gain in a single day. There are not much references to personal finance, just here and there, and I've already published 4 articles on that. You can go to freefincal and have a look at that. We'll consider just one of them today, which will not affect the majority of the population, but it will still affect a good number of people, especially those whose total employee contribution to EPF is about 2.5 lakh. So if your employee contribution, that is your contribution, both mandatory contribution plus voluntary contribution, if that contribution is about 2.5 lakh a year, then the interest on the excess amount, that is the amount about 2.5 lakh, will be taxable. You will have to pay tax on it every financial year, and this is a new provision tabled in the Finance Bill 2021 announced today. And the budget memo says instances have come to the notice where some employees are contributing huge amounts to these funds and entire interest is exempt from tax. They want to stop that and they want to plug that hole. So suppose your employee contribution, the employer contribution does not come into picture here, only the employee contribution. If the total employee contribution is, let's say, 4 lakh, then the interest that you have got on that excess 1.5 lakh, about 2.5 lakh, that interest you will have to declare as income every financial year and pay tax as per slab on it. Then there was another question whether it's cumulative. That is, it is not cumulative. If you pay tax in one financial year, that's it. You don't have to pay tax on it again and again because of the compounding of the EPF. That's because there is another clause that says provisions of these clauses shall not apply to the interest income accrued during the previous year, and it keeps going. So what it means is that if you've got some interest on that 1.5 lakh in the year of investment, then you have to pay tax on that. After that interest on interest and so on in subsequent years, you don't have to pay tax. It's not a cumulative tax. You have to pay tax every year. You have to declare it every financial year and pay tax on it. So I don't know how many people it will affect who are watching this, but some people are unhappy about it. So what does it mean? So it means that don't put all your money into EPF, PPF, sorry, not PPF, yeah, VPF, sorry. Stick to your asset allocation for long-term goals. Don't put too much money into this. Have a proper asset allocation and don't put money into VPF if the total contribution is going to be close to 2.5 lakh or more than 2.5 lakh. That's obvious. Otherwise, you will have to pay tax like a fixed deposit. So if you are contributing more than 2.5 lakh, then your EPF will be treated like a fixed deposit. You have to pay tax as per slab. So don't do that. Put it elsewhere.